What's up, everybody? Welcome back. This week in crypto has been absolutely insane. Price surges, new meme coins, hacks, celebrity moves, and regulatory bombshells. If you thought last week was wild, buckle up. I'm packing all the biggest updates into one fast-paced video. No fluff, just the essentials. We're talking a massive Bitcoin rally, a hacked exchange, a meme coin mania, a celebrity endorsement, and a regulatory shakeup. You do not want to miss a second of this. Let's dive right in. First up, Bitcoin. If you thought the crypto market was quiet, think again. This week, Bitcoin made headlines around the globe, and for good reason. In a matter of hours, it exploded with a price surge that stunned everyone. Traders, investors, and even skeptics. The price shot up so fast, it left even seasoned market watchers speechless. So what caused this jaw-dropping move? The catalyst was a major Wall Street investment firm making a bold play. They bought billions in Bitcoin for their treasury. This isn't just a small allocation. This is a statement to the world that crypto is here to stay, and the big money is finally taking it seriously. The news hit the market like a lightning bolt. Within minutes, algorithms and human traders alike piled in, creating a domino effect of buy orders. The trading floors were buzzing, and the digital order books lit up with activity. For years, these same Wall Street firms dismissed Bitcoin as a risky experiment. Now, not only are they buying in, but they're also going on TV and bragging about their positions. It's a complete reversal of attitude, and it's sending shockwaves through the financial world. This marks a fundamental shift in perception. Suddenly, the risk of not owning Bitcoin is seen as greater than the risk of owning it. Investors are realizing that sitting on the sidelines could mean missing out on a generational opportunity. On-chain data backs this up. We're seeing huge amounts of Bitcoin moving off exchanges into cold storage. These aren't just quick trades. These are long-term holders, locking up their coins and signaling they have no intention of selling anytime soon. The narrative has flipped overnight. Where there was once fear and uncertainty, now there's extreme optimism. Analysts on major networks are openly predicting $100,000 Bitcoin targets, and some are even calling for higher. And it's not just Bitcoin. The surge has lifted the entire crypto market. Ethereum, Solana, and other top coins are all rallying, riding the wave of renewed confidence and institutional interest. Institutional money is pouring in, adding a new level of legitimacy and stability to the space. This could be the spark that kicks off a whole new phase of mainstream adoption, as more traditional investors look to get involved. Behind the scenes, rumors are swirling. Insiders say more big firms are preparing to announce their own Bitcoin buys. If that happens, we could see an even bigger wave of capital flood into the market. This could just be the beginning of something massive. Make no mistake, we're witnessing financial history unfold in real time. The old guard of finance is finally embracing the new digital frontier, and the implications are enormous. To sum up, a massive institutional buy triggered a Bitcoin surge, shifting market sentiment and possibly igniting the next major bull run. The dominoes are falling, and the momentum is building. The big players are here, and they're not leaving. Their involvement is changing the game, and it's only a matter of time before others follow. This is a pivotal moment for crypto, a turning point that could define the next decade of finance. The world is watching, and the stakes have never been higher. Stay alert, this is just the start. The next chapter in the Bitcoin story is being written right now, and you won't want to miss what happens next. Now for some sobering news. A major exchange, Novax, was hacked for over $100 million. Hackers exploited a vulnerability in Novax's hot wallets, draining Ethereum and ERC-20 tokens before the breach was detected. The stolen funds were quickly laundered through mixers, making recovery difficult. Novax halted withdrawals and trading, sparking panic among users. Fortunately, the CEO assured everyone that user funds were safe. Only company reserves were hit, and their insurance fund will cover the loss. Still, Novax's token price crashed 30%, and the event reignited debates about exchange security. It's a stark reminder. Not your keys, not your crypto. Diversify your holdings and use hardware wallets for long-term storage. Law enforcement is now involved, and NovaX is undergoing a full security overhaul. The hack highlights the constant battle between exchanges and sophisticated hackers. For users, it's a wake-up call. Protect your assets. In summary, Novax was hacked, but user funds are safe thanks to insurance. The incident underscores the importance of self-custody. Don't let this happen to you. Take control of your crypto. Stay vigilant. Get ready for some absolute chaos, because meme coin mania is back and bigger than ever. The crypto world is buzzing, and everyone's talking about the latest sensation that's got traders, influencers, and even your neighbor's dog glued to their screens. This week's breakout star is Astro Corgi, ticker symbol $Corgi, a meme coin that exploded onto the scene and went absolutely parabolic overnight. In just a matter of hours, its price chart looked like a rocket launch, leaving early buyers stunned and latecomers scrambling to get in. What's the secret sauce? Astro Corgi's irresistible mascot, a corgi in a full astronaut suit, instantly captured the internet's imagination. Viral memes spread like wildfire across Twitter, TikTok, and Reddit, turning the coin into a cultural phenomenon almost overnight. The anonymous developers behind AstroCorgi spun a simple but compelling story, one that resonated with meme coin veterans and newcomers alike. The pitch? AstroCorgi is on a mission to the moon, and the community is the rocket fuel. The narrative was so catchy that it quickly became a rallying cry, with thousands of new holders joining the mission every hour. But it's not just about cute memes. The tokenomics are designed to fuel the hype. Every transaction comes with taxes that reward holders and burn a portion of the supply, creating scarcity and driving FOMO. This setup leads to wild price swings, with fortunes made and lost in minutes. Early buyers saw jaw-dropping returns, some wallets ballooned by 10,000% in just a few days. Social media feeds filled up with screenshots of massive gains, and the hype only intensified as more people piled in, hoping to catch the next big wave. Stories of life-changing profits spread like wildfire. People who'd never touched crypto before were suddenly talking about AstroCorgi at work, at home, and in group chats. The coin became a symbol of hope and a ticket to financial freedom, at least for a lucky few. But here's the catch. These coins are pure speculation. Prices can drop 50% or more in a matter of minutes. For every story of overnight riches, there's another of someone losing it all just as fast. The volatility is extreme, and the risks are real. The hype didn't stop with traders. Influencers jumped on the bandwagon, live streaming their buys and hyping up their followers. Hashtags like #AstroCorgi and #CorgitoTheMoon started trending, bringing even more attention to the coin. Even mainstream media couldn't ignore the frenzy. News anchors discussed the meme coin explosion, and headlines warned of both the potential and the pitfalls. Suddenly, everyone wanted a piece of the action. Now, the AstroCorgi community is pushing hard for a major exchange listing. If it happens, prices could soar even higher, or it could signal the top, as new buyers rush in and early holders cash out. The next few days will be critical. Always remember, meme coins are the definition of high risk, high reward. They're driven by hype, not fundamentals, and the line between massive gains and devastating losses is razor thin. Rug pulls are common, especially with anonymous teams. Scams and sudden crashes can wipe out your investment in seconds. Never invest more than you can afford to lose, and always do your own research. AstroCorgi's meteoric rise is a perfect storm of luck, timing, a cute mascot, and a market hungry for the next big thing. It's a reminder that in crypto, anything can happen. Sometimes all it takes is a viral meme and a bullish crowd. If you're thinking of jumping in, treat it like buying a lottery ticket. The odds are long, but the excitement is real. Don't bet your rent money. Think of it as entertainment, not a guaranteed path to riches. At the end of the day, meme coins like AstroCorgi are a wild social experiment. They bring people together, spark creativity, and sometimes change lives, but they can also leave you empty-handed. Be smart, be cautious, and never risk more than you can afford to lose. The power of memes is undeniable, but so is the risk. For every winner, there are dozens of losers. Make sure you know which side you're on before you dive in, so buckle up and enjoy the ride, but always keep your wits about you. In the world of meme coins, fortunes can change in the blink of an eye. Stay safe, stay smart, and may the memes be ever in your favor. The crypto spotlight just got brighter. Hollywood superstar Leo Vance made headlines by going all in on crypto. Known for his blockbuster roles and red carpet charisma, Leo's every move is watched by millions. But this time, he's not just making waves in entertainment, he's shaking up the financial world. The news broke overnight, sending shockwaves through both Hollywood and the crypto community. Fans and investors alike are buzzing. Why would an A-list actor take such a bold leap into digital assets? Leo partnered with Eon Chain, a fast-growing blockchain platform that's been making headlines for its innovative technology and rapid adoption. As a strategic ambassador, he's not just lending his face. He's putting real skin in the game, taking a significant portion of his payment in $EON tokens. This isn't your typical endorsement deal. Leo's involvement signals a deeper commitment, suggesting he believes in the project's vision and long-term potential. His announcement video, posted across social media, quickly went viral, racking up millions of views in just hours. In the video, Leo passionately discusses how blockchain technology can empower creators and artists, giving them more control over their work and earnings. He highlights the transparency, security, and global reach that Eon Chain offers, making a compelling case for why he's betting big on crypto. The result? $EON's price skyrocketed over 200% within days of the announcement. Investors rushed in, eager to ride the wave, and Eon Chain gained massive exposure almost overnight. The project's social media channels exploded with new followers, and trading volumes hit record highs. It's clear that Leo's star power can move markets. Celebrity involvement can legitimize crypto and drive mainstream adoption, but it also raises skepticism. Some see it as a sign that blockchain is finally going mainstream, while others worry about hype and potential manipulation. The media frenzy has sparked debates on talk shows and online forums, with experts weighing in on the risks and rewards of celebrity-backed crypto projects. The crypto community demanded transparency. How many tokens did Leo get, and can he dump them? People wanted to know if this was just another pump and dump scheme or if Leo was truly invested for the long haul. Social media lit up with questions, and Eon Chain's team faced mounting pressure to provide clear answers. Eon Chain responded quickly, clarifying that Leo's tokens are locked in a multi-year vesting schedule. This means he can't just cash out and walk away. His interests are tied to the project's long-term success. The company released detailed information about the vesting terms, aiming to reassure both the community and potential investors that this partnership is built on trust and accountability. This move reflects a growing trend. Celebrities want to be real partners, not just paid promoters. More stars are seeking meaningful roles in the projects they endorse, hoping to shape the future of technology and finance. It's a shift from quick cash grabs to genuine collaboration, and it could change how the public views both crypto and celebrity endorsements. Leo's genuine interest in crypto and his commitment to Eon Chain set this deal apart from past celebrity pump and dumps. In interviews, he's spoken about his fascination with blockchain and his desire to support projects that empower individuals. Unlike scandals where stars cashed out quickly, Leo's approach seems more thoughtful and aligned with the project's mission. If handled right, this partnership could drive real growth and adoption, not just for Eon Chain, but for the broader crypto ecosystem. More people are exploring how to use crypto in everyday life, from shopping to investing, and celebrity involvement could accelerate this trend. The world is watching to see if Leo's leap will inspire others to follow. Bottom line, Leo Vance is now the face of Eon Chain, bringing crypto to the mainstream in a way we haven't seen before. His influence could open doors for millions who've been hesitant to explore digital assets, making crypto more accessible and relatable than ever. The structure of this deal is more responsible than most, with transparency and long-term alignment at its core. As more celebrities enter the space, deals like this could set a new standard. One thing's for sure, crypto is going mainstream, fast, and Leo Vance is leading the charge. Now the big one, regulation. The SEC just filed a lawsuit against YieldFarm, a major DeFi protocol. The SEC claims YieldFarm's governance token is an unregistered security and the platform is operating illegally. This lawsuit sent shockwaves through DeFi. YieldFarm's token crashed 50% and other DeFi tokens followed. The SEC's move challenges the entire decentralized model, raising fears across the industry. Legal experts argue the SEC is overreaching, applying outdated laws to new tech. This case could set a precedent for all DeFi regulation in the US. If the SEC wins, many DeFi projects may block US users or face costly registration, threatening decentralization. Some say regulation could bring clarity and attract institutional investors, but others fear it will stifle innovation. The crypto industry is calling for clear, modern legislation instead of regulation by enforcement. YieldFarm is fighting back in court, and the outcome is uncertain. It could take years to resolve. This legal battle will shape the future of DeFi in America. For now, uncertainty hangs over the market. The SEC's action is the most important story in crypto right now. Stay tuned. This could define the next decade. That's a wrap. We covered a Bitcoin surge, a major hack, meme coin mania, a celebrity crypto move, and a regulatory showdown. If you want the fastest, most important crypto news every week, smash that like button and subscribe. Next week's episode is already shaping up to be even bigger. Rumors of a nation-state adopting Bitcoin and a secret project from a tech giant. You do not want to miss it. Thanks for watching, and I'll see you in the next video. Stay crypto curious.